Here now to talk about all of this, Kaltbaum Capital Management President, Fox Business contributor, Gary Kaltbaum, Bulltick Capital Markets Chief Strategist, Kathryn Rooney Vera, and Ladberg Thalman Asset Management, Phil Blancato. Gary, all right, there are two things that I want to talk about here with respect to what's happening here and how it should inform your portfolio. What we see with the economic data, what we see with DICS, the consumer's doing pretty well.
I don't disagree. I think definite areas out there with DICS. I think it's bicycles, treadmills, and golf equipment with what we're seeing. And look, there's just some big winners, but there are some losers in retail. Best Buy, big winner, even though the stock pulled back on earnings. DICS, a big winner, and you know who all the losers are. You see it in Kohl's and Macy's and things like that. But overall, easily the economy is stronger than most expected. And when I go out here, things are busy. It's good to see. But for me, online, as far as retail, is just going absolutely gangbusters,
sure.
And that's where I'm loaded on.
That's the key. Omni-channel, which includes now curbside pickup, for them up 195%. I just want to give you a shout out. You've been kind enough to share your workouts on Twitter, Gary. And here's the thing. If people would have bought DICS when you first started sharing those workouts, they'd all be rich today. But kudos to you. Kathryn, let me ask you about that. Obviously, there are winners and losers. There you go. Kathryn, obviously there are always going to be winners and losers within any particular sector, but this sort of notion that the American consumer is dead, I think has been overplayed for a long time. We've shifted the way we shop, but it feels like we're shopping more than ever.
Well, Charles, kudos to you, because you've been in front of this trend for quite some time, calling what a bull market is. An intense bull market. This is an intense bull market. Yeah, I agree with you. I think the consumer is coming back. If we're looking to make money, which is the title of your program, I recommend consumer staples. That is a sector that has dragged the larger upside in the market. So what we're looking at my firm is for sectors that have underperformed the broader markets, which unequivocally, Charles, have been motored by one sector, tech.
Well, in the beginning, though, of the pandemic, consumer staples exploded. In fact, I got out of things like Kimberly-Clark. I got out of it too soon. I made a bunch of money. I thought there was no way to keep going, but you say stay in them. Let me bring Phil into this conversation. Another thing I like about this, about the report from DICS, Phil, and it's one of my investment theses coming out of earnings season. Any company in my mind that's confident enough to reinstate their dividend after suspending it earlier this year, to me, should be on your watch or buy list. What do you think there?
I couldn't agree with you more. When you look at the reason why the stock market's done so well, it's because you want to buy strong balance sheets. Paying a dividend tells you got a strong balance sheet, multi-channel, and then critical point here, let's not forget what time of year we're in. We're about to go into September here, which means the buying season for the year begins in September and grows stronger through the end of the year. So the idea that consumer being dead, now granted, we may need some more stimulus to keep the support going, but your thesis is spot on. Earn your dividends, buy strong balance sheets, buy consumer-oriented stocks, and enjoy the ride through the rest of the year.
My other contender for stock of the day is Salesforce.com. They also reported after the bell. Last week I talked about buying these SaaS software names, software as a service. This is the granddaddy of them all. Last week you could have bought them all on the dip. Gary, you have loved software names. By the way, shout out to Mark Benioff. I would love for you to come on the show. I know we don't agree on a lot of things, but you are a great CEO, and I would love to debate stakeholder capitalism. In the meantime, though, software is where it's at, Gary. Are there still opportunities?
Oh, yeah. And look, I'm loaded in Adobe, Shopify, ServiceNow, and there have been a bunch of names that topped out July 13th and have just been sitting around for the last 7-8 weeks. They all popped today, 3, 4, 5% off of these gargantuan numbers from Salesforce.com. And I got to tell you, even though it's gapped up, I think it's still up in the 50s. I think the stock is much higher, and I think software is back in play again. And I think that's what's going to lead to more of this NASDAQ melt up that we've been talking about for 3 months. We're getting some 1999-ish climactic moves here, and I'm going to ride it as far as it wants to go.
I got to tell you something. Half the names that are up today, I guarantee you people haven't heard. I made a list somewhere and I can't find it. Maybe we've got a full screen of them we'll put up. But Phil, you talked about a sort of a barbell type of approach the last several times you were on the show. So you've got exposure to the more conservative stuff, but you also think you've got to have exposure to these hot stocks.
You do, because let's be realistic here. The money that's chasing these names isn't going anywhere. You're getting less risk in the equity market than you are in the bond market. So for that reason, I think you own a Microsoft. I think you own a Twilio. Salesforce is a name that is just part of this whole movement to have this multi-channel distribution. And for that reason, you want to weight your portfolio to some of these names that are based on the secular change in our economy. But don't leave behind the banks here. What's going to win, where you're going to get the most alpha, the most return on the other side of the recession is in your banking sector. That the ultimate benefit of all this is going to roll back.
Yeah. I think fintech is giving traditional banks a run for the money. But I want to come to Kathryn, because another thing helping this market, let's face it, obviously the Federal Reserve. And this week in particular, we got a bit in anticipation of Jay Powell. Apparently, he's going to make a historical announcement tomorrow, something that will change the course of Fed history, taking some serious risk here. They're going to let inflation run hot. But here's the thing, Kathryn. I've said for a long time, I think they've been deathly afraid of deflation. You're somewhat of a critic of this easy money. It's going to get easier probably after tomorrow.
Absolutely, and I think it's inflationary ultimately. I think one of the biggest fallacies in modern economic theory is that inflation is a phenomenon that no longer exists because it hasn't existed in the past 10 years, or because we had this onslaught of liquidity both from the Federal Reserve and from the federal government back in 2008, 2010, and it didn't cause inflation then. It therefore will not now. And I think people who think that way are underestimating the magnitude of the stimuli, both from the monetary and fiscal authorities. Really, this reaction has dwarfed Lehman Brothers' reaction. I think it's ultimately inflationary in the 18 to 24-month period. Timing is always difficult, but the Fed is going to move, Charles, to average inflation targeting. They're so far from their 2% mandate, it really doesn't matter right now. But the Fed is inflating the markets. Right. And going back to your previous comment about consumption, heretofore consumption has been boosted by government stimulus and Federal Reserve stimulus. So what I'd like to see is that consumption base, Charles, that foundation solidified in reality, an unemployment rate that comes back down to single digits, and guys and gals that get out there, spend money, and make private investments.
Real quick, Gary K., I know that you're a huge Jay Powell fan. Jay Powell believes,
he's actually telling us he's going to let inflation do what? What does he think? He runs inflation? I got news for you. There's $15 trillion of printed money between Europe and the United States. Forget everybody else. That is gargantuan. If inflation wants to get out of hand, there is nothing he can do about it. He can talk blue in the face. All we know about him is simple. Whenever there's an issue, print more money. Market goes down, print more money. If the Mets lose a game, print more money. And eventually there's going to be one hell of a repercussion when it's all over. And it's unfortunate. One man trying to control markets is crazy, but he's doing a job right now, and you're seeing it in the NASDAQ.
Although they're arguing that they're trying to help the little person, not necessarily in the market, and that's a debate we're going to continue to flesh out, particularly after tomorrow. Hey, before we go, guys, durable goods was a phenomenal number. Just in a sense, the market's looking pretty good here. If you can, Phil, what's the number one idea? I know you've got this a balanced approach, and that's why I love when you come on and explain it. But is there something that you like a lot right now, Phil?
I do. I'll give you the name that if you want to put a couple of dollars in, you can have a real outside return is Marriott Hotels. The strongest balance sheet of a hotel chain in the world. The name that's going to end 24 months from now, 12 months from now, you're going to be thrilled that you doubled your money on. And I think you got a company that's got an upside to this whole pandemic coming to an end, and it's still very cheap.
Kathryn Rooney Vera, just if you have a name for me, I'd love for you to share it with us. Otherwise, we got to go.
Yeah, no, I think you need to protect your portfolio. I agree with the barbell strategy. I think there's still further upside to gold and tips. I like the married put option, which is the purchase of S&P 500 sectors, married with a long duration put, which protects your portfolio to inevitable downside and volatility.
And Gary K., you've been just killing it in the software stuff, and those names are through the roof. Thank you all very much. Always loved our conversations.